Deposits rose by a comparable margin to $2.7 billion, despite a near 19% reduction in the amount of government deposits the bank held. The 18% rise in the net loan book helped to push net interest income higher by over 20%. The bank, however, raised its loan loss provisions by over 40%, nearly $69 million. Now, Yusuf Omari is the Chief Finance Officer at Absa's Kenyan subsidiary. When they spoke earlier today, CGTN's Ramanyang started their conversation by asking him what had a bigger impact on the bank's non-performing loans, the depreciation of the Kenyan shilling, or the impact of higher taxes. Take a look.
If you look at our NPL, the biggest sectors that have been impacted, one is manufacturing. And in manufacturing, you combine that with also the trade business as well. And here, two things have happened. Of course, the FX, the valuation of the local currency, meant that if you're an importer, your inputs are more expensive. So that has an impact on these two areas. And then tied to that, of course, is also the cost of funding. With a high interest rate environment, these two areas have been significantly impacted. The other third area, of course, is personal household. And this one we combined with SMEs as well. And so with them also the issue of, the fiscal measures, like the tax measures that were introduced last year comes into play. So not just the interest rate environment, the impact on FX, but then also the fiscal measures come in.
Right. Let's go back to the infrastructure bond. Government came to market looking to raise about 70 billion. They got 280 billion shillings in bids. They accepted around 240 billion shillings worth of those bids. But based on what you saw coming in through the trading desk, do you have any sense of how much of that was offshore cash coming in, and not just in the initial auction, but also in subsequent trading in the secondary markets? Do we have any idea how much money is coming specifically for that issuance?
Yeah, we saw a lot of interest coming from investors, actually to the tune of about nearly 50% of that auction. And this is what I've mentioned, that investor confidence is basically coming back. And remember, the IFB is in local currency. So you're getting hard currency, and we're getting investors, converting the hard currency to local currency to be able to participate in the IFB.
So roughly what, 1.5, that would be, if my math is off, $1.2, $1.5 billion came in, at least just in the primary auction alone.
Yes.
One of the things that I noticed in your presentation is they say you're targeting double-digit revenue growth, and yet the macroeconomic environment, I know you've mentioned that, look, the argument you're making is there's a fair bit of stability coming in, at least on the currency side. But rates, strictly speaking, are still fairly high. Personal lending rates, I think, are closing in on 20-25% in some cases. You've got inflation that is relatively stable, but a tax environment that's still a bit uncertain for businesses and for households. So given those factors, how are you going to hit that double-digit growth rate?
I think it's a combination. If you look at what we covered today in our results announcement, there's a very big agenda on diversifying our revenue streams. So we have quite a number of subsidiaries which we have started in the recent past. I think the most recent one is our custody business, which we launched this year. But then tied to that, we have our asset management business, we have our securities business, bank assurance. So it's the new revenue streams that we are now seeing are doing extremely well, picking up a bit on a very low base, but starting to pick up. So I think that diversification is working. I mentioned the preference for short-term facilities. So we have, the Timiza app that we use for mobile lending, and of course, digital savings. We are looking to revamp that so that we can be able to offer more than, the vanilla, savings and lending products. So in there, we want to use that, a channel to be able to sell our other services in the bank, like, for example, the ones I've mentioned, wealth management, selling also things to do with, for example, insurance. On the net interest income, I think that picks up mainly from a volume perspective. albeit the fact that with the high interest environment, we are starting to see, some reduced demand on the lending side.